we did it. Sort of. Well, this last month was pretty eventful, if I do say so myself. I ended up closing on a new house in Houston, which we'll be moving into probably within the next 4 weeks, probably not much further beyond that. And I've very much blown out the spending in order to pay for the rehab, which has got me a little bit uncomfortable. We'll get back to that in just a second. But before I do that, if you're new to the channel, this is a series where I document my road to $1 million in net worth as I attempt to reach a $1 million net worth and a passive income of $30,000 per year so that I can achieve financial independence. I document my progress every single month on the 1st, so if you want to stay tuned for future updates, be sure to subscribe if you haven't already. Anyways, like I mentioned earlier, I did end up closing on the house in Houston, which is pretty exciting since we're making the big move. It's going to be by far the biggest move we've ever done. So far, I've only moved within really my sort of city area in Chicago, so I've never gone beyond that outside of a temporary sort of thing for college, but that's kind of a different ballgame. And I've certainly never moved out of state, and I've also never coordinated a major rehab from out of state, so that's been pretty exciting and also quite stressful since I am playing GC at the moment. I'll be doing a way more thorough breakdown on this property in the future, but as a sort of synopsis, I got the house for $285,000 minus a $7,000 closing credit. So really we're talking more like $278,000. It's a 4-bed, 2.5 bath. That's about a 25-minute drive from downtown Houston, which is where I'll be working. And then it's only a few minutes from my wife's job. Your housing dollar definitely goes very far in Houston compared to many markets. If you want to see a sneak peek of what the house looked like when I bought it, definitely check out the video I'll go ahead and link to above. I talk about how I was beginning the rehab on it, which we're well into at this point. Long story short, it needs quite a few things, from new AC units, new furnaces, rearranging the AC system up in the attic because everything's in the attic in Houston because there are no basements, replacing all the windows, adding new flooring, painting the whole place, and removing some very gorgeous old wallpaper. And the roof's about on its last leg, so that might have to go pretty soon. And as an added bonus, while my interior guys were starting their work, they noticed a leak coming from the master bathroom shower, which really was apparently done quite poorly, and we didn't realize how poorly until we turned the water back on for a couple of weeks, and a couple of weeks didn't hit until after closing. And while I was going to be replacing all the fixtures in the bathroom anyways, I didn't think I was going to have to be demoing a shower and redoing it. Not all is lost because we'll get a nice shower out of it, but that's another 5 to 10 grand that I wasn't expecting to spend on this project. And I don't think I'll have too much recourse against the seller on this one, even though they did not disclose that there were leaks in the master bathroom, but it is pretty suspicious that the water was off and we turned it on. There weren't any leaks at the time, but it makes you wonder why the water was off in the first place. They made it sound like they were doing fixture repairs, but I don't think it's worth trying to chase the previous owner for the extra 5 grand, because again, we're only talking about 5, maybe 10 grand, which is annoying, but we're not talking about a $100,000 massive issue that was undisclosed that we wouldn't have been able to see. I just have to keep reminding myself that I'll be getting a new shower out of it. And at this point, the project's already getting up over $80,000, so what's another 5 grand? Just don't want to be doing this every month. But the bottom line is, it was a pretty expensive month last month. We've been spending a ton of money towards this property, and we'll continue to into the next month. I'm probably going to have to buckle down quite a bit over the next few months to recoup some of this investment in the property. And some of it, I would say, is more consumption than investment, but we should get quite a bit back in equity, barring a total market collapse, of course. All right, it's about time to get to the numbers. As a reminder, I always include my net worth tracker spreadsheet in the description below if you want to see my detailed positions as they are today. But as a reminder, last month, our net worth was just under $119,000. As always, let's start with the good stuff, the assets. We have a much larger cash pile than before, and that's because I've essentially maxed out the HELOC, and I've also taken out some margin that was really used for the down payment on the property. But the remaining HELOC balance I had basically was turned into cash, and I've been spending a lot of that towards all of the rehab costs. So expect to see a lot of this cash go away in the next month. My stock market holdings actually did pretty well over the last month, all things considered, so that's still over 6 figures. But the big obvious addition here is the Houston house down under the real estate category. We're approaching $1 million in real estate, which is kind of cool. Though a market crash could always erase a lot of things very quickly. But you'll notice that I have it listed at $305,000 in value. That's to account for some of the rehab that we've done and kind of will be doing that I've already kind of spent for. So just so the accounting here doesn't get too wild, I'm trying to keep up the equity in the property, at least with most of the rehab that's being done. I think once it's all said and done, probably going to be around a $320 worth, maybe $330,000 at most on a really great valuation day, maybe even more if the market keeps clicking. But that's why it's higher than the initial $285,000 purchase price. And my current primary residence below this will turn into a rental as soon as we make the move down to Houston. So We're going to be preparing this one for rental too. I think all it really needs is some paint, so we'll go ahead and do that probably in the next month. But in total, that means we have just over $1.1 million in assets, which is kind of crazy to say. That's the first time we've been throwing around 7 figures in any of these categories.
That's pretty neat.
I guess you could say that I'm a YouTube millionaire, because if I didn't show you my liabilities, I would just say I own over $1 million in assets. So I have $1.1 million in assets under management. Nothing could ever stop me. After all, these investments will only go up.
Your overconfidence is your weakness.
But we mustn't forget about liabilities. That is a very important thing to consider because, well, they're pretty high too. Pretty much all debts are up this month. I used the M1 finance margin partially for the rehab, but mostly for the down payment on the property. We used 5% down, and you can see that mortgage for the Houston house down here at just about $270,000, which was the same starting balance 1 year ago for my current primary residence, as a fun fact. And then the HELOC balance has ballooned up to $113,000 when I think it was something like $60,000 last month. And you can see this unpaid contractor invoice that'll be paying in the next few days as well. These are going to keep rolling in for the next few weeks. But in total, we have just over $990,000 in liabilities, which means our net worth has fallen to just over $109,000, which is a decrease of nearly $9,300, and our debt ratio for the first time has eclipsed 90%, so we are highly leveraged from that perspective. But our passive income remains at $1,100 per month. So there's a bit to unpack here. First off, we eclipsed $1 million in assets, which is kind of cool, but we're just about to eclipse $1 million in liabilities as well, so we have to be very careful because even a slight pullback in our asset values would mean that we'd be underwater. But thankfully, the vast majority of my debt is not callable. So even if my asset values fell, it's not as though I'd have some sort of margin call to tend to for almost all of the debt. And something that's not accounted for in my net worth numbers is the fact that I always have cash reserves for every single one of my properties, especially my rental properties. I have enough money in their reserve accounts to weather storms for quite a while, even if rental income were to go away or greatly reduce for a while, or if I had some sort of capital expense to take care of. That would not throw things off course unless they were just so extremely bad that they cashed everything all at once. But I don't include those reserves in my net worth just to keep things a bit on the conservative side, and because I'm kind of viewing the money as gone and something that I'm not going to be able to spend unless an emergency or something arises on the property. So I am still highly leveraged, but not quite as leveraged as the numbers might suggest, and I can weather a storm for a while. But now that we have this house and we're going to be done with the rehab in the next month, and my wife has finished school and she'll be starting her own job soon, it's really time to buckle down on debt pay down. I really want to get that HELOC balance in particular down to kind of the levels we had before this episode, near that $50,000 mark, just so that that variable rate isn't such a risk. And also because we could take that money back out because it's revolving to then pay off other debts if we wanted to, or to invest in other opportunities. I think that is the focus for the next few months. It's going to be putting most of our money towards that HELOC. And sometime after that, we're probably going to put a ton of effort towards those student loans because we are trying to pay those off in the next 3 or so years. And in the meantime, I'm probably going to take a short break from investing in real estate because I really want to get something that has much higher cash flow potential, maybe not as much appreciation or access to amazing debt terms, but something that could throw off a lot more cash flow. Maybe that's investing in my own business or buying someone else's business, just to try and get some more of that kind of initial growth engine going. And what I mean by growth engine is cash flow to then use to invest in things like real estate, more defensive sort of assets. I've been looking at a few ideas recently. One pretty seriously is actually buying a laundromat somewhere, probably in Houston, since I think there is some interesting opportunity there, and there actually are some pretty good financing terms as well for equipment loans or through SBA loans, and that's for other small businesses as well. I've also looked at potentially buying a website, but just something that could really produce some greater cash flow while I'm working on building the other aspects of the portfolio that I've been documenting to this point. But I've been talking with a number of people about these sorts of opportunities, so I'll keep you posted if I end up doing something, because it probably would be within the next 6 months or so. There's also a chance I don't end up doing something like that and the plans change because, well, the market and the sort of environment we're in can also change. But I gotta get through this rehab first. As I said earlier, if you don't want to miss future episodes, then be sure to subscribe. I put out a new one of these episodes every single month on the 1st of the month. But otherwise, like, comment, subscribe, all that great stuff. And until next time, take care.